major markets ended mixed, as there was only slight gains in the Dow Jones and emerging markets. The losses were greatest in the NASDAQ, as it gave back twice as much as the S&P 500. At the sector level, the gains continued in energy, as the sector continued its lead over all other sectors year to date. The 3% return in energy was due in large part to the last few days of the polar vortex. The GSCI Natural Gas Index spiked another 4%, as the national supply of gas fell from a 5-year high back down toward the 5-year average. Meanwhile, financials surged 2.8% last week, as the sector benefited from increases in interest rates. The longer-term end of the yield curve has continued to steepen in recent weeks, causing some market analysts to worry about the possibility of inflation. The 10-year Treasury climbed 14 basis points to close the week at 1.34%, 41 basis points higher than the close of 2020, and back at the highest level in a year. This movement in interest rates has continued to weigh on bond markets, as the Bloomberg Barclays U.S. Aggregate Bond Index fell 57 basis points last week, to sit with a year-to-date loss of 1.8%. Despite the recent increase in yields, Treasury Secretary Janet Yellen reiterated the need for additional stimulus in a recent interview, saying, "I think the price of doing too little is much higher than the price of doing something big." This echoed the sentiments of Fed Chairman Jerome Powell during a recent speech to the Economic Club of New York. Powell said, "We are still very far from a strong labor market, whose benefits are broadly shared. Achieving and sustaining maximum employment will require more than supportive monetary policy. It will require a society-wide commitment, with contributions from across government and the private sector."